NYSE Einstein, the Einstein of Wall Street, from the floor of the New York Stock Exchange. We're coming to the end of October, and we are trading on record highs in the S&P. That is unusual. The month that tends historically to be one of fragility, anxiety, and sell-side posture did not pan out this year. This is the year of new beginnings, new rules, I don't know, new everything. All that being said, let's just talk about the day. It is Monday. We're coming into the end of the month, the end of the last week of October. We came in today, we still have nothing settled on China, although there is inklings of, progress in trade talks, but I think that's smoke and mirrors. What we are finding is that the momentum of the market on the upside, earnings are beating more than people expected. The relief that this tariff problem is not weighing heavier on a lot of these financials and healthcare stocks and some of the other ones, the CATs and the triple M's, that have really hoisted this market into new, positive, record territory is a good thing. So our worstest fears are not being realized. Our hope is sort of being fulfilled in a certain way. All that being said, earnings are beating more than not. Guidance seems to be positive. The market, as I've been saying day in and day out since earnings season began, is not forgiving to those who are missing. Today that would be Google. Today that would be Meatless, Beyond the Meats, whatever that stock is. All that being said, today was a very positive day. We closed the S&P in record territory at 36. Record close before that was 3027, so that was a sizable thing, up 17 handles. Russell up 13. They're buying mid cap, small cap, large cap. They're buying the tech sector, right? The Intels, the PayPals, those seem to be outperforming and doing well. The Dow Jones Industrial Average, which has been weighted down by a few independent dogs, still getting a lift that it needed to close above 27,000. Not at a record, but at a nice rally. Up 132, closing at 2790, 770 volume on the light side. We do have a lot coming up this week. Economic data seems to be positive coming across the table. Momentum in the market seems to be good. No particular manufacturing numbers are better than expected. We are still I don't know, forget that thought. Anyway, all that being said, we've got the Fed this week. Some people say it's priced in. I kind of think it's just what is the fire under this market. I believe it is QE in all different ways. When you've got multiple months and multiple quarters of lowering interest rates, it seems to be the fuel in the fire. We are proactively looking to the future, to potential manufacturing and global slowdown, and whatever is the impact of the trade problem that we don't know yet. Lowering interest rates is the fuel that keeps on giving. It is the fire that's making this market drive itself higher and higher. All that being said, enough out of me. Inside Versatop, the Einstein of Wall Street, from the New York Stock Exchange. I'll see you tomorrow. Busy week, a lot of news. Love you all.